We're looking at a fascinating surge in the meme coin arena, with Pippin jumping around 31% after a rocky bearish phase. And that sudden uptick truly caught many eyes.
Absolutely. It's like the token has really turned a corner recently. But can we really call it a sign of the meme coin season's return?
Well, the narrative seems to be leaning that way. The recent price rally is drawing attention from traders, yet there's plenty of caution, especially with the funding rates in the futures market turning neutral or even negative.
Yeah, right. I thought the futures traders didn't seem overly enthused about the burst, did they?
Exactly, they're showing hesitancy. While on-chain data from Nansen indicates that exchange balances are falling, meaning investors are moving tokens, about 2.2 million PIPPIN tokens at that, traders in the derivatives space aren't fully convinced of a sustained trend reversal.
True. So on one hand, you've got investors accumulating privately, and on the other, futures data suggests that market sentiment remains unsettled. It's like a tug of war.
Yeah, it's a duality. The accumulation part is interesting because falling exchange reserves usually imply that holders are building positions rather than just liquidating. But, yeah, the overall picture remains murky because the technicals show the price hovering around crucial resistance at about $0.514.
Right. Speaking of technicals, isn't it fascinating that even though Pippin is trading near 0.488, there's a fight just below that upward threshold, and a potential flip of 0.600 into support is key for a true rally?
Absolutely, it's like the token is trying to find its stride. The recent rebound from the 0.366 support level was dramatic, yet moving forward, trading above that resistance is vital if Pippin wants to challenge deeper into bullish territory, especially toward its all-time high of $0.720.
Got it. But what happens if it can't clear that 0.514 mark?
Well, if sellers manage to reassert themselves, we might see Pippin retreat further, possibly slipping below 43 cents and 44 thousandths. And if it really falters, a deeper drop toward the original support at 36 cents and 66 thousandths could invalidate the recent bullish narrative entirely.
That's a bit concerning. It makes me wonder if we're just looking at a temporary rebound rather than, the start of a longer-term trend.
You raise a valid point. It's like the market is in a state of indecision right now. The futures funding rates turning negative suggest that some traders are shifting focus to downside risk instead of banking on a clean breakout.
Exactly. So even though the accumulation suggests some level of investor confidence, the hesitance in the derivatives market might hint at potential volatility ahead.
Yup, it presents a bit of a paradox. It's like you're watching two different narratives play out simultaneously. On-chain data offers one reassuring story of accumulation and potential long-term support, while the derivatives market signal that traders are still cautious, almost second-guessing if this rally can sustain itself.
That's a sharp observation. And do you think that the broader meme coin sector's improving macro cues might help tip the scales in favor of a sustained trend?
It could, in theory. The rally aligns with an overall, improved sentiment in the meme coin space, as optimism within the community can indeed drive short-term momentum. However, it really depends on whether this optimism translates into continued investor support and broader market participation.
Yeah, right. Let me play devil's advocate here. If we're factoring in the stark caution from futures traders, isn't it possible that we're overselling the sustainability of this rally?
That's a fair challenge. It's like, while private accumulators seem bullish, the derivative market and that signaling of negative funding suggests that a pullback is on the horizon. It all boils down to market psychology. Are these accumulators the early birds paving the way for a trend reversal, or just, positioning themselves for a low-risk entry ahead of an expected dip?
Exactly. And with Pippin still 47% below its all-time high, the price really has a long climb if it's going to regain past glory, right?
Yeah, definitely. Climbing back from 47% below its peak is no small task. For Pippin to re-establish itself as a leader in the meme coin season, reaching that flip point of around 60 cents as a new support, and then eventually approaching the all-time high will require consistent bullish momentum and the right technical conditions.
Right, absolutely. So, in your opinion, is it more about the inherent fundamentals starting to align, or is this rally a result of short-term speculative play?
It's a mix of both, honestly. On one hand, we're seeing genuine accumulation, which points to some fundamental confidence. On the other hand, the fact that futures traders have dialed back their bullish leverage suggests that a lot of this may still be driven by speculative impulses.
Makes sense. And isn't that sort of typical in the meme coin world? A roller coaster of rapid moods, speculative surges, and then cautious retracements.
Exactly. It's like a wild ride. Meme coins often swing dramatically based on sentiment shifts, news cycles, and sometimes even influencer hype. Pippin's situation is no exception, a surprising rally amid bearish days, but with clear technical obstacles to overcome.
Yeah, definitely. Speaking of technical challenges, do you see any immediate catalysts or support mechanisms that could help solidify this rally, aside from reaching that critical 0.600 mark?
The data suggests that the decline in exchange-held tokens is a positive sign, hinting at accumulating investor intent. If this can continue, coupled with a potential broader bullish turnaround in the meme coin market, it might serve as an essential support mechanism. But without those, a failure to clear key resistance could very well lead to a retraction.
That's a good point. And what about the role of market commentary and analyst sentiment? Do you think that plays into the price action we're seeing?
Definitely. Visionary headlines like, "Is the meme coin season back?" can actually create self-fulfilling prophecies. They amplify investor sentiment. However, there's also the risk of panic selling if the narrative changes quickly, so it's a double-edged sword.
Right, exactly. It's interesting how the emotional side of trading interplays with the technical analysis, isn't it?
Yeah, it really is. The emotional ride always adds an extra layer of complexity. Traders and investors seem to be living in a state of high expectations and heightened uncertainty. It's like, while on-chain data gives us a hint of a positive build-up, the overall market mood remains cautious.
Correct, absolutely. So, wrapping this up, where do we stand? Do we believe Pippin's rally has the potential to reinvigorate the meme coin sector, or is this just a short-term anomaly?
I'd say it's too early to call. It has the makings of a revival, bolstered by investor accumulation and improved sentiment in the meme coin space. But the technical hurdles and cautious positioning by futures traders mean there's still significant headwind. It's like watching a pot that might just boil over, or might just simmer and cool down.
Exactly. So, for now, we should keep a close eye on resistance levels and the funding rate signals as they evolve.
Absolutely. And it's crucial for investors to stay analytical and not get swept away solely by the hype. The disparity between on-chain indicators and derivatives market sentiment is a clear reminder that markets are multifaceted and can pivot quickly.
Right. It's a reminder that in the crypto space, especially with meme coins, volatility is a given, and smart investing means understanding both the technical and emotional currents.
Exactly. And while Pippin's recent action is promising for those hoping that meme coin season is on the horizon, the path ahead remains challenging. The next few days will tell whether this surge is sustainable or if it will fade into another example of short-term market exuberance.
Yeah, I can definitely see that. I guess it all boils down to the balance between accumulating smart positions and monitoring if the technical barriers get surpassed.
Precisely. We're in an exciting period where cautious optimism must meet rigorous analysis. And as always, it's important for everyone to do their own research and tread carefully amid the sometimes unpredictable world of meme coins.
Absolutely. This interplay between price, technical resistance, and market sentiment definitely keeps things interesting for traders and enthusiasts alike.
No doubt about it. Every data point, from on-chain metrics to futures indicators, plays a vital role in telling the complete story. And in the end, it's this intricate dance of numbers and sentiment that makes the crypto market so captivating.
Yeah. Well, it's been quite the ride dissecting these dynamics today. Thanks for the insightful discussion.
Anytime. It's all about keeping our eyes on the full picture and being ready for the next twist in the tale.
Exactly.